Welcome back, and to Matters Technology. FinServe, the firm behind Equitel, is opening up its platform to over 2,000 small and medium enterprises and startups to leverage on its application programming interface. Developers, startups, and SMEs are already leveraging FinServe Africa's APIs, craft innovative products and services.
Has been an avenue to allow companies and small businesses to leverage on the financial platforms. According to the World Retail Banking Reports 2017, the APIs allow banks to achieve their digital goals as well as collaborate with non-traditional providers to value-based marketplaces that can improve long-term loyalty. One of the products that is leveraging FinServe's APIs is EasyCharmer, an online solution that enables investment groups to manage their financial activities, including record-keeping and bank transactions, while maintaining transparency and accessibility among the members. Launched in September 2017, FinServe's APIs have been used by businesses including those managing airtime sales, logistics, payments, cash management services, among others. The Easy API allows developers to seamlessly integrate their websites and apps with Equity Bank's payment platform. Jumia, Charmersoft, Cellulant, and Strathmore University were among the first to integrate the Equitel API to their platform.
And Kenya is awash with fake mobile phones. New research conducted between May 2017 and May 2018 reveals a proliferation of substandard phones in the country. According to the Communications Authority of Kenya, most recent report, the mobile telephony subsector registered substantial growth in the second quarter of the financial year 2017-2018. Mobile subscriptions rose from 41 million in the first quarter to 42.8 million in the second, marking a 4.4% growth over the period. This means that the 24.6% unknown handsets represents 10.5 million fake phones currently in the market. The unknown brands ruled the local market, beating popular makes such as Tecno and Samsung, which command 19.4% and 15.3% respectively. However, Kenya is not the only country grappling with the fake phones menace. The problem is even worse in neighboring countries. In Uganda, counterfeit phones account for 35% of the market share compared to Tanzania's 34.7% and Rwanda's 33.7%. The Anti-Counterfeit Agency has over the years made feeble attempts to rein in mobile handset counterfeiters. For instance, in 2015, ACA seized about 60 million shillings worth of fake mobile phones within Nairobi CBD, highlighting the massive magnitude of counterfeit phones in the market. Last year, ACA's crackdown on vendors nabbed 5,000 fake phones in Mombasa County, and in 2016, the police attached to the agency arrested 4 suspects and seized counterfeit Samsung mobile phones worth 25 million shillings in Nairobi County. And a majority of Kenyan youth have shunned traditional media such as newspaper, television, and radio stations, and instead prefer to read and watch news on online platforms and access information, especially on social media platforms, entertainment, news apps, and blogs. Fresh research shows millennials, whose population demographic continues to grow, are fans of the internet, with 60% sourcing information from the platform and making it their primary source of news. 7.6%, radio 7%, and newspapers trail at 5.1%. A Geopol survey shows not only do African millennials spend more time on social media sites, they also spend as much time in gaming. Geopol shows that the most downloaded apps by category are social networking, gaming, instant messaging, banking, finance, education, health, and fitness. The poll was conducted among 2,861 respondents between the ages of 18 and 34 in Kenya, Uganda, Tanzania, Ghana, and Nigeria. However, Kenya's millennial habits are not unique. The trend continues in the rest of Africa, with neighboring Uganda youth who use social media to access information hitting 61.4% and Tanzania 49.3%, while in West Africa, Nigeria's youth rise to a whopping 70.9% and Ghana 64%. Like their global counterparts, African millennials are increasingly using download sites to access video entertainment and social media sites as tools for communication and as a source of news and information. Mobile data continues to be the most used means through which African millennials access the internet. Social media platforms such as Facebook, WhatsApp, and Twitter have become an integral part of everyday life, with over 60% using the networks as their primary source of information. Television comes a distant second at 25%, with newspapers being the least important source at 6%. And App Store today celebrates 10-year anniversary. The application platform, owned by America's multinational technology company, was opened on July 10, 2008, and initial 500 applications available. As of 2017, the store features over 2.1 million apps.
And in the 10 years since, the App Store has grown from strength to strength, now boasting over 2 million apps. To celebrate the milestone, App Annie, an app market data and insights company, has created a report including some of the highlights of the App Store. The report reveals that since 2008, a staggering 4.5 million cumulative apps have been released on the App Store, 77% of which are games. And while it may sound like a lot, the average iPhone user now has over 100 apps installed and uses over 40 apps each month. Of other apps, games were some of the most popular options, accounting for 31% of all downloads. Surprisingly, in the UK, the most popular game was Candy Crush Saga, closely followed by Clash of Titans. Meanwhile, the most popular non-game apps were WhatsApp, Facebook Messenger, and Facebook. And when it comes to spending, customers were most willing to produce their wallet for Spotify.
And a Kenyan startup insurance, Bismart, and a German investment boutique focused on African startups have entered into an agreement to educate and advise customers on the best insurance and investment solutions available in the Kenyan market. This and other stories in our weekly roundup.
Will see Bismart benefit from Green Tech's expertise and experience in funding startups in Africa through capacity building and process optimization. Green Tech, headquartered in Frankfurt, Germany, will invest an undisclosed amount of money in Bismart to enable the company upscale its digital and online platforms to connect customers to insurance and investment solutions available in the African market. Meanwhile, Jumia has announced a 3-month guarantee policy on selected items. Jumia Managing Director Sam Kapati says the move will see the company take direct responsibility for any unsatisfactory product and offer customers an immediate replacement or refund. Kapati added that the move will improve trust in online shopping, which is supporting the rapid growth of the e-commerce industry in Kenya, currently valued at 4.3 billion shillings. The guarantee will cover products with manufacturing defects, dead on arrival, counterfeit or wrong items delivered. It, however, excludes consumer goods, beauty and fashion items, and low-cost items below 1,500 shillings. Finally, Pesapal has integrated Visa on Mobile, formerly M-Visa, as an option into payment processing platform. As a payment option into its payment processing platform, Visa on Mobile will now be available to over 21,000 businesses as a payment method both online as well as on Sabi, Pesapal's point-on-sale platform. This new offering joins existing card payment options from Visa, MasterCard. Visa on Mobile is available immediately to all Pesapal business customers in Kenya. Consumers opting to use Visa on Mobile to make payment can do so via the Visa on Mobile option available on their official bank apps.
And away from the stories, we now look at